Hello, everyone. Well, I wanted to make a comment about one of the most impressive aspects of Cardano ADA. And living in the crypto universe, we tend to imagine that volatility is really some form of a knife with double edges that can cut through us and cut in favor of us. But to be absolutely honest, it depends on which cryptocurrency projects we are speaking, and it depends also on how we read into the notion of volatility. But today I'm suggesting that we look at Cardano ADA from a point of view of non-volatility, or from a point of view which excludes volatility, to be more precise. I was playing around with the data and I was noticing that if you went ahead and you picked the 200 days moving average, you notice that the price of ADA has never, almost never flinched under that threshold, that 200-day moving average. Now, it does look like an insignificant point, but the reason it is a significant point, though, is that if you went ahead and you took a look upon BTC and USD, say for example, you see another story. You see that it actually is a far more concavity changing or convexity changing, depending on how you speak your math, curve. So it was clearly a curve which had some ups and downs. Now, to be clear here, Bitcoin has far more story and history, but in general, Bitcoin has a tendency to do some type of flat to 100 moving average moment, and then it accelerates at some points, like in, well, this was just at the end of and getting in the beginning of in the end of to 2020 and the beginning of 2021. We can see the slope was actually really getting steep up. Um, one thing we have to understand about the moving averages, and especially the long time frames ones, is that they tend to give us a notion of how the price would move if we excluded the noise of, like here in this case, what is in the daily, basically. Because one day is nothing in comparison to 200 days. The information you get, although it is skewed to the past, because, well, to calculate the moving average, you need to um, include the information of 200 latest days, the window of 200 latest days. So it comes in with some delay, but it tells you how might someone who really do not care at all about the movement of intradays can evaluate this thing. And looking at Bitcoin, you can note that, yeah, sure. I mean, it did have like a significantly boosted moment here. In fact, so significantly boosted that if you take it somewhere around the start and say maybe the start is something around here and something where it starts really to decelerate, somebody who knows absolutely nothing about how crypto operates at all might just come ahead, place some money, and they would expect to get somewhere around 200% upon their initial investment. Um, so this is the significance of a moving average. In the case of Bitcoin, you can notice two things. First of all, it's not boosting any longer. So we're getting under a regime where it is a little bit like at this moment. Well, even at these phases here, it was even a negative slope. Uh, but let's just assume it is somehow maybe of a start either of a negative or a flat moving average phase or regime. And that is true about Bitcoin. Let's take a look at Ethereum. In the case of Ethereum, things are slightly uh, different. I mean, it tells another story. It tells that it actually has been accelerating here. All right. And again, not the same story, not the same market cap, but it's a far more optimistic story for ATH, at least in this macro regard, so to speak. But now let's take a look at a new element. Going back to ADA and picking the USD, first of all, ADA almost never goes under its 200. When it started really to get in its booming phase, it never went under. Almost never, because this one was just Kraken being drunk, and this was 2 days. And what's maybe more important here is that upon those 2 days, the market was so ADA was so visceral about it that it reacted in a form of explosive upward movement, which sort of produced maybe a 200, 180 points return. So this is this is two points here to retain is it doesn't get under this curve. The price of ADA doesn't get under this curve, and when it gets close to it, it sort of revolts. BTC is slightly different. It went under that curve. It went above, but it didn't stay long. And it does seem the concavity is changing. So we're talking of something different. Ethereum. I should learn really to type. In case of Ethereum, it's closer to ADA in that respect, and so it does get under it, but it doesn't stay very long. However, you want maybe to pay more attention to a movement where something falls, gets back, and really falls back again. Although it really brought itself back to the graces of its investors because it got to a 133 RY movement later on. But it's really getting close to this curve. It can break it and it can stay some while under it. So it's not as clear a resistance as it is for the case of ADA. Now, there's actually another piece of information which we should take a look at. Well, what if now we ask the question of the 100 days moving average? Well, what you might note is in the case of ADA, once again, but maybe a little bit in less of a pronounced fashion, you have only an upward curve. Okay, sure, the acceleration of that curve varies. Here it's far more steep, here it's a little bit less steep, here it's a little bit steep. It's almost flat at this conjuncture here, but then it gets steeper. Let's take a look at BTC in that regard. And there, it's a different story, isn't it? Because the 100-day, and it's this one, moving average, it actually changed absolute slope sign here. I mean, it was upward, it was downward, and it's gotten under the 100 moving. Again, in the case of ADA, this is it's not even a joke. It's quite fascinating because it didn't touch it. It refuses to touch it. And by the way, this is a this can give you some signals because there we tried to touch it, revolt. We got under it, but it was a wick through on a day, and it went above. Wick through in a day, and it went above. Touches it, sort of mini revolution. Touches it, and hey, by the way, it breaks through it. It goes back. It sort of breaks through it. It touches it. It touches it. It touches it. It touches it. It's almost 6 or 7 times. It's trying to deal with this line here until at some point, seventh time is a good time. Yeah, you can go under, but then you go under and you have to respect this 200 days moving average, and you go above and it sort of resists naturally, but it sort of acts like an accumulation phase where now, second time you touch, and no, I shall not take that. It sort of gets up, and once it starts thinking about what it does here, and you can see that it's really thinking it through here. Once it breaks through it, it's with a dynamite. But again, the piece of information here is the 100 days and 200 days do not touch. More of a question here is how far they are. It could change in the future, obviously, but up till now, this is the state of things. BTC, it's another story. We're really having a dance here, and it can signify something. Ethereum, it's much more ADA-like in that respect, where actually the 100 days might not be precisely the most significant one here. Probably if you want to take a look at Ethereum, you probably want to bake some other one, and the other one could be I don't know. You said it sometimes play with it for a while to. I'm sorry, I meant to do the inverse. So we are going to play a little bit with this one until we see some point where we sort of get some events, some significant events, and this sort of sounds like one possible one. So maybe around 80 somewhere. For ETH is a more significant one because you see that it sort of respects it. Um, but it's sort of more of ADA-like in that respect. And if you finally wanna take a look at a final one, let's go back to the 100-day moving average. Let's open now the. You can pick 60 or 50 or 47. I tried to pick some that show some sort of define some events here because you can see that it obviously this is acting as a sort of short-termish resistance or support line. Um, and here you sort of get a notion that all right, now we're starting to get into the zone where the volatility of Cardano ADA is more significant, and it's around 45 days, which means that you probably need to pay more attention to volatility around that mark if you want to really make some trade-ins for ADA. In the case of others, and I'm not going to take a look at a BTC at this stage. You just you just can see that in the case of the 47, different to ADA, one element is that the 47 actually touches the 200 days moving average here. Not only it breaks through the 100, it breaks through the 200, but it does it once. It just quite of means that actually the term of volatility for Ethereum is far more powerful than it is significant in the case of ADA, because you can see levels of volatility which might bring you back to challenge the long-term acting price. Whereas in the case of ADA, it sort of acts against the 100 days, but it doesn't go as far as touch the 200 days. long story short, I'm not trying to sell you ADAS here. I'm just trying to share with you this analysis and, in some ways, to tell you that should you even be as boring and bored, and no shame in it, by the way, to just buy ADA and stick with it for a while. Your question is not so much whether the price will drop or not, because long term, you know that you have. I mean, this is about as close as you get to a linear regression here. You kind of. I mean, look at this, dude. It's quite unbelievable. And if we were to plant a little flag in here and push this baby, I mean, this is in the real world, this is as close as you get to linear regression. And your question is sort of, you have two questions. The first question is, how far upward does the actual price, the day-to-day price of ADA, stray above this line? Because at some points, like for example here, it really gets to a peak. Sometimes it's fairly close, like here. So this distance is the question you ask yourself, at least statistically speaking with ADA. The second question is, when will we see a change of regime for ADA? Because we live we live in a world of realities, and at some point, I would be very surprised if this continued to be. Sorry for that one. If this went ahead like this, exactly like this, your ground game is just basically waiting for time to lead you to multiples. So in the first point I've mentioned, you are more of a trading state of mind where you want to examine how you can maybe pick these moments where you can sort of buy and let it rise up and then sell for it to fall back a little bit and then buy to let it get up and down. And sort of the question is more or less either to look at the 100 days or 200 days moving averages to time your entry in order to sort of maximize yourself uh, on time frames which are in the order of, well, for example, this is 2 months, this is a month and a half, right? So again, those 47 days where the volatility plays out, you probably want to maybe time yourself to make some good graces here with these explosive moments. And that's probably not something I would recommend because it takes some work, but it takes some risk as well. But again, here is the info. If you get in with ADA, especially if you get in at some point where it sort of flirts with the 200 days moving average, you are just waiting for the time for this to grow up, or, and it could happen, and it probably will happen at some point, the regime change. And if the regime change, then we have to reassess ourselves. But for the moment, nothing indicates that regime is changing. So there it is. Take care of yourself and see you maybe next time.